All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Anytime I go to cash in the challenge, it's one of those where it prompts questions. And, the most common question is, all right, now what? Yeah. Now what? Now what do we do? Now what do we do for the challenge? And that's very common and very understood. And so I want to jump on and just give you my challenge thoughts. I want to talk about this challenge in hindsight, right? You know me, I'm not a big hindsight guy. The whole, oh, woe is me, I should have made a different decision yesterday. Well, given the information you had yesterday, would you, in that same scenario, make a difference? Decision? Most likely no, so I don't find much value in hindsight. But there are a few things that we could talk about, and then talk about the challenge future and where it goes from here. So this challenge got kicked off at the end of the end of August. And we started it off here with, middle August, I should say. We started it off here with some Apple calls, and, I took a gain early on. I know that was a decision that was not popular by many because, Apple went up more afterwards, but, even in the moment, I mentioned that I was, making that trade to kind of get the challenge off to a good start, and we did. And then traded Adobe, and you could see the trade here. I took my gain on my puts and I rolled it into different puts, and I ended up losing out on my on the gains, right? I gave up my gains on that, but that was something that great. I wish it would have worked out, but the decisions I made at that time, I go back and look at. I would not have made different decisions, knowing what I knew at the time. And knowing what I know now, of course I would have made a different decision, right? That's easy to say. And then we did this kind of cat triple M combo, and this is one that one of you reached out to me after I got into this because I bought both of these on the same day, and I believe it was a Friday, and said, are we not getting a little too aggressive in one group and in one sector with this trade? And, because logical argument, cat, triple M, same trade. And I said, yeah, you can make that argument. And if it goes against me, it'll look really bad. If it goes my way, it'll look pretty decent, right? And, cat, ultimately the gain looks decent, but, this is something that I was down on the initial day, right? I mean, I was down. The options had actually fallen down that day because I entered in the morning, and then in the close, I went and bought some triple M calls, even though, cat had been down on that day, but ultimately paid off, fairly nicely, and then had just kind of a few, what I call nonsense trades. The trades I call nonsense are the ones that just, they're not going to make or break the challenge. They're small gains or small losses. They really didn't do what I wanted. And I put Pepsi, Facebook, JP Morgan, AT&T, Walmart kind of in this category, where, it's not a 30% loss. It's not a 30% gain. In trading options, if you're talking about, a move less than 30%, you're probably not talking about the stock having moved all that much, right? So, I go through and, all right, lost about, lost what, about 10% of the challenge on these nonsense trades. If you AT&T, Walmart kind of offset, and then, a little bit down with these other three. But then Triple M. Nice payoff for us, with Triple M. This is where I started to put more money into a position, right? I put a little over $3,000 into a position. Starts to increase the position size there. When it came to Triple M, ultimately paid off. We made a nice little trade on IBM. Cashed out with a pretty small gain. And then we really started to grind. Really started to grind a little bit. Market was kind of hitting that flat stage, And I played some IWM calls on the off of the lower Bollinger Band with the IWM, and was up a little bit, and I had the choice: do I take it? It's moving above the 7. In fact, let's go look at the chart here. It's one of those where I had the decision of okay, do I? Here we go, off the lower band, bought it off of the band. Here we go, we're moving on up. We're moving above the 7-day moving average. All right, boom, this is exactly what we want. Here we go, gap up. All right, ready to, right, and just fell off, and we know ultimately how that played out. But as it came back down, it forced me to get out. I couldn't stay in it. I know it went up a little bit the next day. I got called out for that. But for me, I'm not. That's not my intent. Is to look at what's it going to do in the next couple hours. To me, I look at that as more random than anything. But overall, it was the first. It was the second type of setup that I had where I went, okay, you know what? We're starting to swing a little bit harder for the fences, meaning if it pays off, we get to that next level for the challenge. And, we got that with Triple M and Caterpillar, pushed to that next level, that first double. IWM was trying to push us up over the 10 grand mark, and it deflated. And, okay, great, it happens. All right, it's not the end of the world. I, took a loss on that, $1,400 by the time it was all said and done. So a sizable loss there with it. About, 25% of the challenge at that time here with IWM. And then, got some, in fact, on that same day, closed a little bit of Microsoft. Had some calls here on Microsoft that I closed on that exact same day, and it was one of those where, with Microsoft, okay, just see some turmoil coming in, and decided to close it. So ultimately, a nonsense trade, and then 2 days later. I got into Microsoft calls again, and this one stung. We put about $3,000 into it, and it moved against me, and just pretty much moved against me right away and fast, and so had to jump on out. I took about 50% loss, and so the kind of the sting off IWM, off Microsoft. All right, we're not at that next level for the challenge that would have been nice to be at. But then we got this really interesting setup come in, and it was in General Dynamics, and it was a really nice setup, and I remember talking to my brother about it, and let me get the exact entry day here, the 28th of September, and let me annotate this, because up to this point, in the challenge, there's not a decision that I would make different at that moment, right? Knowing what I knew in the moments on any of my entries and exits, I would not have done anything different. I didn't look and go, oh, okay, you know what? There's something here. There's something, wrong. Something I should have done this. In hindsight, yes. I mean, that's easy to do. But in that moment, on those, there was nothing, so far for the challenge that was that way. And then here on the 28th of September, went out and bought a decent position here in General Dynamics. And this is one, I think of all the trades that I made this challenge, I got more comments, more emails about General Dynamics than any other trade. And this is one where I got in, and then the next day stock went up a little bit, and the next day it faded, right? And it's one that I even talked about the volume that day. I said, look, it's low volume. It tells me nothing's really changing. And I just kind of have to weather a little flat for a bit. And then slowly grind up, close off of its highs, close off its lows, push on up. And then we have this day right here where it pushes on up here to the 207 and, to the 207 mark. And it looked like it was ready to go and ready to stack some nice gains into the trade, and then reversed into the close and basically ended with no gain on the day. And it was one of those nights where I went to bed and my wife, she'll ask me, she'll say, what do you think about your trades and blah blah blah, and she doesn't know a whole lot or offer a whole lot with them. She just, I think, asked me to be nice. But I said to her, you know what? I should have gotten out of my General Dynamics today. And, she goes, why? I said, there's nothing chart-based. There's nothing price action-based that, says, hey, I should have gotten out. But when it comes to, what's going on out there and how things are playing out, I probably should have been a little more conservative and should have taken it and run. And I made that comment to her that that night, and she said to me, well, hopefully you get a chance to do that tomorrow. And the next day, stock opened up. It was a little bit lower in the morning, started to rally, rallied on up, and I just said, you know what, I've got to take it. And there's nothing chart-wise that said, hey, I got to take it or anything else. But I knew with the option that I had, if it reversed, it would be a bloodbath, and a very quick and fast bloodbath. And so I took it, and I ran, and I got close to the high. But I whenever I get the high or the low, I always just consider myself lucky. But got close to the high, and it felt pretty good. All right, out of General Dynamics, here we go. And all right, we can shake off Microsoft and IWM a little bit and go. And then, we started watching the market change a little bit, right? We start to get into, this kind of mid-October time period for the market, and we're starting to see the S&P come on down, and we get down to this bottom band, right? We get down here, man. Oh, so tempting, to buy at the lower band, just like right here in June or just like right here in May, just finally getting a little bit of pullback to be able to buy, right? And so I said, well, how do I want to do this? Because I saw the market metrics shift. The market vibe changed. We saw the market internals really shift here. And I said, well, I'm not willing to put on a major position here, but I'm willing to dip my toe in, and I dipped my toe in with some Ford, and on the entered the 8th of October, and if we look at it on that day here on Ford, this is something where we've talked about. I like the valuation, really like the valuation here. And on the 8th of October, it made this fresh move back above the 7. Right? Fresh move back above the 7. It was coming off of this lower channel, right? We had this kind of channel setting up here. It was coming off that next move above the 7. Right? Chance is pretty good. It's going to go my way. Next day, whew, flush, reverse. I had only done an all-or-nothing position on it, so I didn't have to sit there and analyze and worry and be concerned about that. But I did not have enough time to then be able to weather another dip. But my exposure was fairly low. Okay, great. You know what? It was nice to be in a position to be able to make that kind of a trade, and it did pay off. Okay, next. Great. Had the signal, went for it, but didn't pay off there. Then FCX entered on the 9th and ended up closing it the next day. This is one where I questioned. This is one where I look and I say, you know what, Jeff, maybe you're just a little too aggressive at that time. But here's FCX on the 9th. And, nice little reversal off the lows, some good volumes, really kind of came in, here on the 9th, came in off the lower band. I said, all right, I'm going to buy it off this lower band. Next day, gapped on down, some good volume. I had to go because of the risk reward on my option. If it continued to go on down, I'd be in trouble. It snapped back the next 2 days, so maybe I could have held it, but it's something where I bought Ford off, or I bought the IWM off the lower band. I used FCX off the lower band to kind of play in that market condition, and ultimately didn't get a bounce off the lower band. So it cost me a couple losses here. And all right, fine. That's the reality of it. I took that risk, took that chance, and they didn't pay off. But I didn't have anything outrageous or egregious here in terms of exposure or risk associated here with it. And then just watching the market play, and you'll notice it kind of went a time period without much of a trade. Went a couple days in cash, and then I got into some FXE. And this was a currency play here with the FXE, and bought some FXE calls as it starts to move above the 7-day moving average right here. It became apparent relatively quickly that there wasn't going to be follow through here, that this head and shoulders pattern just wasn't going to emerge the way I expected. And so I decided, all right, I'll just take it, move on. It became one of those nonsense trades. It's pretty meaningless. And then we get to these SPY puts. And if you ask me what was the worst trade of this challenge, it's not even close for me. It's just not even close which trade it is, and that's these SPY puts. It is the absolute worst trade of the challenge. It is the trade where I look at and say, I made a mistake. I can't say that about some of these other trades. I can say, yeah, maybe I took a little too much risk, or maybe I didn't take enough risk, or, maybe I should have just taken a small gain and moved on. I could have that, but, the same argument for IWM, oh, man, you should have just taken a small gain and moved on, right? Well, back here in Apple, it was I took a small gain, I moved on, and, the stock went my way afterwards, and it was like, why aren't we holding it? Why aren't we still in it, right? The mentalities work both ways in everybody's mind, and it's one of those where I made the decisions I made based on the factors that were in play, and great, I'd make those again. But on these SPY puts, I made a decision, and it was just, frankly, the wrong decision. I got out. I was a little too concerned about a loss. The market bounced here, had this down day, and said, all right, you know what? This is the sign. It's ready to go to new lows. Market vibes negative. We finally got the bounce. We're going back to these lows, and I got out. The market rallied that day. It opened up down, and then it just kind of whipped up that day. And I ended up getting out, and it ultimately was whipsawed me. And, it was one where I told my brother, I'm just watching too closely. For the amount of movement in this market, I was just watching that position too closely. And it ended up costing the challenge big time. Big time. And you can say, well, you know what, Jeff, you would have been out on this gap down. And that's realistic. That's probably where I would have been out, right? For me to say, oh, I would have held it through and into these lows, that's not realistic. I would have been out on this gap down. In fact, I even mentioned it that day on video. But that's the trade to me that stings, the one where I look in hindsight and say, yeah, that was... yeah, you know what, Jeff, that was dumb. And I know why, right? I'm just watching a little too closely. All right, great. Move on. They can't do anything about it. I know it's only a $440 loss, and so most people will say, well, who cares? That's a nonsense trade. But in terms of the decision making that happened then, that's where I made the mistake. And then we got this gap down in the market, and the market dropped and rebounded, rallied on back, and Adobe gave these side-by-side candles, this beautiful side-by-side candlestick pattern. We talked about it at the time. It's a relatively rare pattern in the market to see, but it's a strongly bullish pattern to see. It's one that, most times is going to have bullish follow-through. And, the next day, market decided to roll over. Adobe was going up that morning. It was up a little bit, and then it just rolled. And when I looked at the market, I looked at the conditions, I had a decision to make. Do I pull on out and kind of sit out a little bit, wait for the next entry? Or do I want a position that I go, you know what? I know the market's going to be volatile and it's going to go for a ride, but I ultimately expect this stock to outperform. And so do I want to hold one of those? And I even mentioned at the time, I'm going to hold it. I'm going to hold it. I'll weather through some of this market volatility. I have plenty of time on my option. And I made that decision. Weren't a lot of signals in the market at that time or anything else like that. Market was pretty oversold. And ended up holding on, and we would come back to the 200-day moving average, and this is an area that I expected to hold. But ultimately, it just took too much time, and my option value just eroded, too much. Yesterday, I made the decision to hold Adobe because of the light volume sell, right? This is the same decision I made in 4 other trades that worked out, right? It's not a different decision. It's the exact same decision and methodology as other trades. This one didn't work out. Gap down this morning. I had to go. I had to go. At this point, I don't have enough time in my option. Had to go, had to move on out. And then I jumped out of Halliburton at the same time. Halliburton yesterday broke down broke the 7 here, with the gap down breaking the 7. I bought this on the Katy signal. The Katy signal, it hit the Katy signal stop, and so I decided to move on out. So that's very, there's nothing I'd do differently here, except maybe buy an option that was in the money instead of one that was out of the money. That probably would have been the smarter move, if I look at it at what I knew then. That would have been the bit of a smarter move. But overall, I could have reacted a little quicker to it yesterday. But at the same time, yesterday with most of the metrics, it was just kind of showing a pretty mild pullback. So, nothing I really would do differently there with Halliburton. So, when it comes down to it, it's one of those where, my big mistake was here with the SPY. Right? A lot of these others, it's just kind of, I know IBM went up big after I got out. Okay, great. And then the other thing that when I ultimately look back at this challenge and say, man, and I think this kind of shows a little bit of kind of the fine line sometimes when it comes to trading, that when I bought Adobe that same afternoon, and, it's in my notes. That same afternoon, I thought to myself, you know what? Do I want to do Adobe, or do I want to use Walmart as my stock to buy and hold through this time period? Which one do I want to go with? I chose Adobe. And you can say, well, you should have gone with both. Well, my exposure and whatnot, I didn't want more exposure. I went with the little bit more of an aggressive play by buying tech rather than a consumer name. And ultimately, it didn't. Well, in hindsight, it looks, it stings a little bit. But that's when I look at the challenge. Those are the two things that I will always remember. In every challenge, there's something that I remember, something that really stands out. And most of these trades, nothing's really going to stand out. Maybe a little bit of General Dynamics, maybe a little bit of Apple, the first trade, only because of the amount of commentary that I got on that trade. I never felt like I had such a losing trade in all my life, which was, ironic, which was kind of funny. Been through that before, but it's one of those things that, definitely when you're doing what I'm doing, you have to be able to take a little bit of that, and great, more than happy to. But I won't remember most of these trades when it's all said and done. They'll just go down as trades. But I will remember this SPY. I will remember this Adobe. They won't change my process going forward, right? Especially the Adobe. It's not going to change anything I do going forward. The SPY, that one is one where on the next whipsaw, that trade will come into my mind. It'll definitely come into my mind and definitely be something I'll have to look at and say, okay, Jeff, you can't make a decision based on that. Look at your metrics and go. All right. Now, as I'm talking here, you kind of hear me talking and giving some challenge wrap up and challenge summary like I'm ending the challenge. And yeah, I'm ending this challenge. Okay, I'm ending this challenge. I'm going to take a loss. I'm going to end this challenge and go. All right. Now, I'm doing this so that I can do something that I've wanted to do here for a while. And for a while, we just haven't had the market environment to really do it. But I want to do a little bit more of an active challenge where the number of trades increases pretty dramatically from, here, this is kind of normal challenge number of trades. 1, 2, this Adobe was the same. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This IWM was the same. 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So about 21 trades here in 2.5 months there, which is about normal challenge pace. That's about what I expect to see. That's about what I expect to see for a challenge. But I want to do a little challenge to jump up that pace a little bit. Similar for those of you who remember the community challenges, and you remember me competing in a couple of those, and going to the playoffs with a couple of you in 2 of those, where pretty much every day I was making a move, and some days I was making 2 or 3, some days 4 or 5. There's a risk with this, though. The risk of having a few more trades is a couple things. Number one is when people are following, right? Not getting as good a fills in or out, right? Because I'm being a little bit more aggressive, being a little bit more, into it. That's the biggest risk. Okay, the 3,000 is always going to be the risk, right? It could go to 0, great. That's the risk for any challenge. But in terms of a trader minute format, being able to do it or having to do it like that, or doing something like that does increase the risk of some fill disparity, or maybe missing out on a trade here or there. And so that is one of the risks. The other risk is the day trade factor, and this is one I'm going to have to be able to throttle back a little bit. Most people's broker accounts, if they make more than 3 day trades within a 1 week period, they get tagged a pattern day trader. They have to have certain requirements in their financial requirements in their account, and that definitely creates an issue for some. And so I have to be respectful of that. And in fact, the account that I trade the challenge out of has that exact same restriction. So it's one of those where if I get into where over a 5-day period I've had 2 day trades, I'm going to have to throttle back a little bit, make sure I'm not putting myself into a position for a possible another day trade. Now, I'm not going to make any trade for the intent of a day trade. Most trades I will be making will be for the intent of 1, 2, and 3 days. Okay, that will be the intent for most of the trades that I make. And then when the challenge gets up on over 10 grand, I will take about half of it traded in this style from this challenge and keep the other half going in the little bit more of a faster pace, type of a thing. I don't want you to think that, oh man, Justin's going to be making a trade all the time everywhere. I've got to sit on video, and if I miss it, I'm over. No, it's still going to be one where most times I'm going to wait for a little bit of stability to come in. That way it goes out. People have time to grab their phones, make their trade on their phone, move on with their life. I don't want this to be where you feel like, oh man, now I've got to sit down with Jeff all day, and that shouldn't be. That's not the intent of Trader Minute. The intent of Trader Minute in trading is to have some freedom and to be able to move on. Now, the other thing that trading at a little bit of a faster pace does is it makes it a little more difficult to be able to talk about every trade. Some trades, you know what? I'm just not going to be able to put down, well, I'm getting into it because of A, B, C, D, and I'm looking for this and that and that and this and this and that. Because when I trade at a little faster pace on my own, there are some trades I just look at and I go, I really like that. I'm in. I'm going for it. Going to make the trade. And I don't have a great, eloquent reason there for it. And a lot of times those serve me pretty well. And so I'm not going to, if I'm going to trade at a little faster pace, I want those in there. And, sometimes there just won't be a great, eloquent reason associated with it. I'll mention that, say, hey, look, this is just something it fits my eye really well. I like the risk reward here on it. I really think it's got some directional element to it. Let's go. And you'll see those come into play here. All right. So going to kick off the new challenge next week. I'm not sure exactly which day it's going to kick off yet. Michelle is still working on that. She's asked me to kind of wait a little bit to start it. But one of the things I'm going to do in the meantime, it'll probably start Thursday or Friday next week. Okay, most likely that's about what I'm looking at. I'll let you know as soon as I know the exact day. But in the meantime, I will be here. I will be doing some videos. I'll do one each day talking about kind of the market, some of the trade setups. But I have some education trainings to catch up on that I've just not been able to deliver over the last several weeks because of everything that's been going on with the market and whatnot. So I'm going to use the beginning of next week as that time to be able to step in and deliver those trainings that have been prepared, that are sitting in my notes, that I'm going, okay, I just got to get them done, and we'll be doing that here next week, probably about 2 to 3 a day. It'll come in kind of fast and furious here, but again, they'll all be recorded for you to access at any time you'd like. So don't feel like you have to sit there and be on in real time here with me. In fact, some of those I might actually simply just record when I'm meandering about at 3 or 4 in the morning, and simply record those and then post them during the day here as well. But I will be around, but I probably won't make the next challenge trade until Thursday or Friday here of next week. I'll share with you my watch list. My watch list is going to go down. My watch list is actually going to shrink with this. And the reason why my watch list is going to shrink is because when I'm using 30 and 60-minute charts, those shorter term periods, I'm going to get more signals. And it's to watch it definitely better to be trading fewer stocks than too many. I still will keep some freedom open to be able to throw in any stock there like I always do, but the ones I watch the closest, the main ones that I target, those will those I'll share with you which ones I'm going to be using. A lot of them, it's not going to be because of any sort of massive fundamental reason or even any massive technical reason. A lot of them will come down to the fact that they have options that I love the way they move. And so an FCX is going to be in there, because I just love the way the options move over time and the way the stock moves. You're paid off when it moves your way. Yep, there's risk if it doesn't, but I really like how they tend to trade. I love the way the Pepsi options trade. I like the way the Caterpillar options normally trade, but I'll share with you, the stocks I will be looking at, and go from there. The TM signals, Market Vibe and the KD signals and Trend Rider signals, they'll all still be posted and whatnot. You'll probably see me get a little more aggressive with some of the Trend Rider signals that come in, with just trading a little more at a little higher frequency of a pace here. Apple will be on that list, especially if Apple goes to the 200-day moving average. which, look, we talked about after the earnings. This is one, it doesn't have a great valuation argument associated to it anymore, right? It's up big on the year. So there's the valuation argument's gone. When you look at the fundamentals, it's a growth name, and if they deliver on the growth, this thing's going big. They did not deliver on the growth in this quarter. Yes, on the quarter numbers they did, but in the future outlook, they absolutely did not. And so it's one where, Pat, to see this come and trade into the 190, 185 area, I would not be surprised to see, and definitely would want to be dipping, trading it around that level if it's able to get there. I expect that the market volatility will not return to 2016, 2017 levels. I don't expect that will be the case. I expect that with what we've seen with two major corrections this year, that the overall swings up and down are just going to simply be greater. And that makes for a much better environment for shorter-term trading, and we'll be, so we'll be doing that here for this next challenge, kicking off here next week. If you have any questions, shoot them over to support, and can help you out there. And I will definitely keep you posted. I'll keep my thoughts in the message stream here, and we'll be back with you Monday morning. We'll kick off some of these trainings. We're going to start with one that I've been wanting to get out in terms of trading or using how to trade to make consistent income. It's one of the questions that we get quite often. One of you have been asking me about that, so want to go and look at that here with you from a little bit of a different angle, a little bit of a different light, and then we'll get into some other things here next week in terms of some of the economics as well as some of the shorter term technicals. They're going to see me talk a little bit more about shorter term charts, 15-minute charts, 1-hour charts, applying principles to those charts, and trading off of those charts going forward. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.